Good afternoon. Welcome to OptionsTender. We're taking a look at SPY. We're going to start off with the 10-year note, the yield. It's TNX. And we're going to talk you through what I think is going to happen going into FOMC. And it looks like the market wants to go just a little bit higher in SPY, but I think that it's going to get there. I don't think it's going to get there from tech in particular. I think we might get a reversal here and look for DIA and the small caps IWM to start taking over the move. And it might be a drastic move, explosive move from those going into or after the meeting of FOMC. And we'll see if we can get some sort of reversal. We just did a members video for Tesla. So make sure you check that out. And we're doing this intraday about 12:43 p.m. Eastern Standard Time. So if you're interested in getting these intraday, consider becoming a member for 99 cents. And you get the Discord with it too. Awesome. So just a weird day. We have the VIX up and with the market up, all sorts of things happening here. But I want to first start off with the 10-year. So what I have illustrated here is the bounce. So we have a impulse 5-wave move down, and I think we're just getting a retracement back to the test the downtrend line, and I think somewhere around here we'll get a reversal back there. So with the index moving up here, the 10-year yields, it says sell small caps, and that's the DIA and IWM as well. It's IWM is the small caps, but you see clearly they're going hand in hand. Both of those are getting beaten up, and it's by big tech. All right. Well, I think as soon as we get our reversal off of here, I think that's going to change dramatically. And with this being a 1-2 setup, wave 3 is going to be very strong and impulsive. And with that said, anytime the bond market moves and moves aggressively, it really affects the market itself. And I think we'll be in the opposite mode where we sell tech and buy small caps. So I think small caps will be relatively stronger, perhaps even new highs with FOMC or whatever other catalyst has it going to extreme levels. And the Qs, mega tech stocks, are going to drag the entire market down. And eventually it's just from order flow, it's all going to go down together, just like it's all going up right now. Okay, so FOMC is Wednesday. Now, let's start off with a reminder. If we go to max here, monthly, a reminder of where we are. Here's the 2029 crash here, 2000 crash, in 2024 top. Clearly we haven't crashed at this point. So this is just a matter of time before we get some sort of reversal off of here. So let's go over to SPY. We're not going to spend a lot of time. I just want to get an illustration, kind of a maintenance of what I think is going to happen. We have this bearish rising wedge. I think price action is going to test the top of this wedge again. And what's happening right here is we're getting to the downtrend line. I think this might be forming a triangle. So this is real indicative of a wave 4 if we're getting a triangle. And we'll look at this count, but then I think we'll have a breakout from the triangle to get up to the top of that wedge one more time. So that could be 611, could be 612. And then we'll see at that point with FOMC, you can get huge moves afterwards. I think we're going to call it fade the Fed. So this move could be very dramatic. And I'm leaving this, let's do on hover, middle. And I'll leave this here for the illustration about 20 days of, we already showed two examples of what could happen in the beginning of a bear market. 2020 we showed, and we showed 2000. I'm probably going to do 2029 next. And that initial move was about 14% in about 16 days. We have this at 22, but 16 daily trading bars. It's just a devastating move. So after this ride up here, clearly this isn't breaking down aggressively anywhere near anything like this. So one more move from FOMC, maybe we get that big pop, we'll fade it, and I think the drop will be pretty harsh. Will it be like this? No idea, no clue, but we have to be ready for this, and it's going to be a very dramatic move going into Christmas break, and that's just highly unusual. But 2018 is definitely a good example of that, where everybody's on vacation and the market is just tanking. So looking at our other board, we have a look here where this entire move I was just counting as an A, B, and then a C, where we counted 1, 2, 3, 4, 5. I think this is a little bit different now. What I'm getting from this is we had a 5-wave move here, and we counted this earlier. We counted it like this at one point. But now it looks like this is a zigzag, just like we're supposed to get. We have a 1, 2, 3, 4, and 5, all in this 3, 4, and 5. To finish off A, we got our B correction, and with the election, we had an impulse wave 1. And so now I'm looking at this last move, because of the triangle that we're forming, it's just being a 1 impulse, and that could have been the end of the move, right? That could have been a 5-wave move to be an A, B, C. And now we're getting the extension to where this is a 1, 2. And so we've been talking about that kind of over and over. And so now we need to take that, and I wish I would have caught it sooner. So this is a 1, 2. We ended wave 3 up here. And wave 4 is sideways, not crossing over. This is a regular zigzag, not crossing over the wave 1. So we have that shallow move here. And then I'll get rid of this 1 and 2. We'll use them later. And so now we're getting a sideways triangle, where in this triangle, it's an A, B, C, D. We should get a retracement here for an E. And we should get, that's probably going to go into tomorrow and or Wednesday. And we should get a breakout to the upside, where 610 is our first major target there. But then we have to take, even on a smaller scale, the retracement from wave 3 to 4, the retracement higher on a breakout, our first target would be 127, the 127 thicker red line here, just above the 610. So we're talking a point or two above, and that should be it for our target. If price wants to extend and throw over the, remember the traditional look here, that would bring us right into this area right here, into FOMC. If price wanted to, and by the way, this can happen before leading up into FOMC, and then we get our reversal here. So we don't know the timing wise on that. And if it wants to throw over, we had that 614, just about 614 right up here. And we'll be looking for a fade back into the wedge, which would be a fake break, and all of our targets will be met. So that's how we're looking to play this. I'm not sure if we're going to be playing any. If price gets down here, to 604 by the end of day or into tomorrow, I might just throw one or two contracts up to probably 610 into, I don't know, Friday or so, just to get a quick double on some contracts, and then use those contracts to add on to positions here. So not a big play here, not worried about it. I might not do it if I'm not paying attention, and then put some new money to work right here anyway with this move. So if it breaks down at this point, this isn't an impulsive wave, so this actually looks less momentum, like it has a less momentum than this. So it's really looking like a triangle here. It could go straight from this point, but it doesn't look that way. All right. So after wave 4 is done, we'll get wave 5, and then we should be complete with one last divergence here to the top area into the options expected move. And will we hit both ends of the options expected move? I have no idea, but we should get a reversal off of Wednesday, Thursday, perhaps. And then going into next week, we'll know real quick into the Christmas week what kind of move this is going to be, if it's pretty relentless. Okay, so Qs, we're going to zip through now. Qs at the top of its channel right here, or wedge, the smaller range wedge. And what this was doing was a 1 2 1 2 1 2 3 4 5 4 5 4 5. Okay, so this nesting here is uncoupling right here. It's looks like it's complete if you count it in that way. That's the most extended way we can count that there. So I think this is complete. That's why I think that the Qs start to reverse early at this point, and I think those might be done there. IWM. And IWM is just completely overextended, and you could see where this either gets some sort of massive move to the upside and reaches higher targets, or this is some sort of leading diagonal 1 2 3 4 5, and it at least bounces midway or so. But you just see the overextended move there. That's the whole point, is just showing this. Look at that, just straight down from here. So that looks more like an impulse wave, but I've seen crazy things. So if this just, again, gets a massive move to the upside, maybe it can make new highs. But if this is an impulse wave down, again, this bounce could bring us 50-60% up, and that could help the market stabilize, or at least get up to those targets that we're talking about from that point. And the VIX. The VIX is breaking out from this point. Maybe we get up to the downtrend line here. So we have the first wedge broke out, second wedge broke out. Now this could back test, and that would still be really healthy for the VIX to back test. We close that gap there. This wedge, and then to break out. So that would be setting up really good positive market structure. So with this heading down, that would show that the market is probably heading up to those last targets there. All right. And perhaps we get it with the little bit of a reversal in the triangle. Perhaps we get up just a little bit higher and reject off of this line before setting up a 1-2-1-2 setup. Okay. You see what I'm getting at? So that's all. That's what I got to show you. A shorter video. Have a wonderful day, and we'll talk to you tomorrow.